Kraft Heinz is preparing to break itself up a decade after an infamous merger of the two biggest names in packaged foods that was orchestrated by Warren Buffett and Brazilian private equity firm 3G Capital Partners. According to the Wall Street Journal, Kraft Heinz is planning to spin off a large chunk of its grocery business, including many Kraft products, into a new entity that could be valued as much as $20 billion on its own, according to people familiar with the matter. That would leave a company housing goods such as sauces and spreads like Heinz namesake ketchup and Dijon mustard brand Grey Poupon. The company has given priority to its faster growing offerings like hot sauces, dressings, and condiments, which are more in line with consumer preferences than processed lunch meats and cheeses. It hopes the two separate units could be in total more than Kraft Heinz' roughly $31 billion market value currently. Chad, what is your assessment of the Kraft Heinz breakup, and what is the potential value creation given as the rationale?
So first of all, it was a pretty big week for food M&A
Yeah.
overall. I believe this
Yeah.
was just the day after Ferrero announced the deal to buy Kellogg,
Yes.
cereal division, right?
Hmm.
Um, Listen, in this case, the massive devaluation that's occurred since the Kraft Heinz merger is stuff of legend, right? So, am I surprised to see this, like especially in this current era of pretty massive portfolio shaping and reshaping across food and bev CPG? No, not at all.
Hmm.
Your question is, will it work, right?
Right.
Um, Listen, the theory of M&A is painfully simple when you break it down, even though it's kind of painful to make work. You need to make the move that adds value.
Hmm.
And so the numbers that are being stated out in the article are, wow, we break it up, it's worth more than it is together. How does that work, right?
Mhm.
So, it's the inverse of an acquisition deal, right? If you're acquiring, you're betting on being able to disproportionately grow something more or faster than it otherwise could, or grow the same at a higher profit margin. Otherwise, you're paying for it in the purchase price.
Hmm.
That's what Ferrero is banking on by taking those slower moving cereal brands from Kellogg. That's what JM Smucker bet on with Hostess. Countless examples. If you're divesting and breaking things apart, you're getting rid of the boat anchors that others could do better than you, right? In this market, growth is hard. Folks have negative comps. So you're seeing this a lot. It's shrink to grow, right?
Hmm.
Could someone else do better with Oscar Mayer and Lunchables and mac and cheese when these brands aren't succeeding at Kraft Heinz? You know what? Probably, right? The large conglomerate CPGs, they take off their pants one leg at a time like the rest of us. They have to allocate resources like anyone else. So, these brands, they fall out of favor, kind of a death spiral internally. So, someone who can take them, make them higher priority, take the brand equity, invest in marketing, invest in innovation. It's been shown numerous times that it works. And that's what they're banking on here, which does make sense if there's a willing party, which is always the other side of it. But the breakup, I mean, it's just a couple of years ago in terms of what Kellogg did, into Kellanova and
Mhm.
Kellogg, and now
Hmm.
that's selling off to Ferrero, who's going to try to put it on speed. It's a 10-year journey here that reached kind of an inevitable conclusion, and we'll see where it goes from here.
Yeah. Chad, how much do you think like regulation is going to impact? In the past, you had these mergers and acquisitions or divestitures happening. Do you think that there's less opportunity now because of the requirements to change ingredients or remove artificial flavorings and that kind of stuff in this kind of category that will impact that?
I don't know that it has an impact specifically on a deal like this. I mean, listen, the
Okay.
entire food industry is on watch right now when
Right.
it comes to that.
Right.
And that's just becoming, at this point, some degree of table stakes of how the industry
Yeah.
needs to react going forward. I'm not sure that especially brands in this kind of catalog, that ultimately is going to be a deterrent or an accelerator on M&A activity.
Got it. And David Brown, where do you see the opportunity here from this? As somebody who's worked in professional services for a long time, if Kraft Heinz is coming to you with their separate companies now, what are some of the key things that you think could be or actions that could be taken right now to help the success of the future of the
Yeah,
business?
I agree with a lot of what Chad said, and I think there's a couple other angles. Well, and I think what we're seeing now is the dismantling or the proof point that a lot of the 3G work just really didn't work, right?
Yeah.
That, all of these billions of dollars of cost synergies that were supposed to happen
Hmm.
really haven't worked because of either the complexity of the organizations or, as Chad said, the resource allocation, et cetera, et cetera. So I think the opportunities as you split these apart is really going to be laser focused on what
Hmm.
matters
Yeah.
for the consumer.
Right.
So you pick a strategy and then you ruthlessly execute against it. It's really hard to pick, you know, six different strategies within an organization and execute it against it effectively,
Hmm.
because it just doesn't work, right?
Yep.
So I think that's what we're seeing more than anything here. And as you kind of divest and be able to get more focused, I think the other interesting thing that I haven't seen in any of the press on any of these deals yet, uh, is as they go to either get sold to foreign entities or foreign entities are looking at them, the regulations do matter, right?
Hmm.
There's a lot more ingredients that are limited outside of the U.S. than
Right.
inside the U.S. That's a whole different debate
Right.
that we could have. But also the ongoing tariff situation.
Hmm.
And like if you start moving, kind of manufacturing plants, or now you're re-importing cereal or mac and cheese or whatever it is, you could be talking about drastically different price points.
Right.
So
Right. And
it'll
they,
be how that plays out on the valuations.
right. And Kraft Heinz has had this innovation center focused on, on product design and development for 75 years or something now too, but likely focused on the US market and what they're doing here, not what those regulations are probably going to be when you're looking at overseas buyers. Chris Walton, round us out here. What else would you add to what David and Chad had to say?
Yeah, I don't think I'd add much, but I do have an analogy that I use to think about these things. I think
Yeah.
of it like, whenever it was, what would they say, it was 15 years ago that this merger happened. To me, it's just like, it's like a marriage, and the marriage didn't work out, and they need to separate, and they're not as sexy, they're not as good looking, they're not as happy as they were when they were apart from each other. And so now they've got to separate and potentially get back into the gym and start working out and finding the happiness in life. And potentially there's another acquirer down the road. And maybe to David's point, that acquirer is an international company that is farther ahead on understanding the different puts and takes with, refining product formulations and all that. So that's how I look at this. It's just, the natural progression that happens for a lot of folks in many aspects of life.
I love it.
Except for you, Chris, who's gotten sexier over time.
Oh,
Oh,
thank you, Chad.
wow.
Thank you. Flattery will get you
Wow.
everywhere on this podcast, Chad. Thank you. Thank you.